Hi, everybody. This is Gary Dean, and this is our Night Video Report for Wednesday, December 7th, 2016. Today surprised me a little bit. Not going to lie to you. This isn't this isn't the first time that I was surprised, and it's definitely not going to be the last time. But I did not see a 29 point rally hitting today, and it really did not have the makings of a 29-point rally today. We were hovering up and down a little bit throughout the morning where we were going up three, down three, and it was pretty much that is what I was expecting. And then there was a massive, massive, massive buy program that hit, and they were just throwing money in and buying at the ask no matter where it was. And we saw the S&P run almost 19 points straight up without anything. And from there, we just got shorts that covered, and that's what you got today. So yeah, definitely didn't see this coming. I don't think a lot of people saw it coming, but it happened. And I'm not the type of trader that's going to sit there and listen to the financial news media and all the newsletters saying that the sky's the limit. You got to get in now. I don't do this. I missed this move. It sucks. I'm not, I'd love to have been long this entire time. Took a short position with the put position, got wiped out on that one, and I've been cash watching this, and I'm not, I refuse to jump in and just jump on the bandwagon, not knowing where the bandwagon's actually going, because I think we are definitely probably closer to some type of top than we are a bottom. But again, I'm not looking at at a bear market that's starting. I'm looking at a pullback that's going to play out, and it will probably be some kind of buying opportunity. And then getting into, in 2017 is probably going to be the swing trading short position that you're going to be able to take, and it's probably going to be going down a lot further than some people are anticipating. But right now, I'm not overly bearish on the market. I'm just not willing to jump in on a 170-point straight up move just because Liz Clayman and some of the people on the financial news stations are jumping out of their seats because the market's up so much. Yeah, so I'm sitting and watching. I'm waiting. If we don't get a pullback, then I'll sit and wait probably till the end of the year. I don't want to do that. I hope there's something that comes before that, but the market doesn't really care what I hope for. So what would make the most sense? I'll stick with this. I think if we didn't get that massive buy program today that shot this thing up, it still makes more sense to see some kind of move come down to this 2160, 2140 area. We haven't even had, since this rally started, we haven't even had a 23% retracement. So that's one of the reasons why I'm not jumping in. There's been no test of support. There's been no pullback. This has just been, pile on the rabbit to the upside. So until I can see what it's made of, is the foundation made out of quicksand? Is it made out of toothpicks, or is it made out of cement? And the way that you know that is when it comes down and tests support and holds it, and then we see buyers step back in. But until we see that, I have zero desire to jump in on it. I'm just going to wait for the next setup and jump in. On the hourly chart, we had these massive, massive bearish divergences, a little bit of a pullback, and this is what I'm talking about, where we haven't even had a 23% retracement. Here's the 23% retracement line. It's 2183. You never got there. And from there, they continued up. So, again, I'm not complaining. I'm just saying it's one of the reasons why I'm not really interested in jumping on the long side right now, not until I see some type of, retracement and I feel comfortable jumping in. So, it's like I said, we had the bearish divergences. Everything was really, really looking for a move lower, and this move kind of wiped all that out. So we're probably going to have to form these bearish divergences again on this end of it, and that's really about it. Now, one thing I want to note here is on the daily is we do have some bearish divergences on the daily charts. So this is something that you want to keep an eye on, because I was looking for it to form a little bit like this, so I'm not going to lie to you that this popping up like this was not really in my game plan, but it's it is what it is. But as long as we don't take out these highs on this part of it, it'd still be setting up bearish divergences. So On a 60-minute chart, you can see just a 23% retracement brings us down some 40 points. That's down to the 2204. That's through support, so that would lead me to believe that we'll at least come down and test this 2188 area, and if we're coming down there, why not try to 2181? Now that's again if they head down and what would be a normal retracement. The way this market's going, if there's a big fund or somebody that has to get into this market before the year closes, it could be frustrating waiting on the sidelines. But again, once he's in, then from there we usually head south, and that's not something that I really want to be long. And we don't know when he's going to be done finish buying or anything like that, if that is the case. But anyway, normal retracements that I would be interested in would be 2204, 2181. Again, we have this moving average that hasn't even been tested for over 170 points. That's a lot of points, and that's at 2168. This is where I would be interested in buying, is if it came down here. But like I said, the market doesn't really care what I think. So on a 15-minute chart, I just did some Fibonacci extensions here. You can see that, so from this low to this high to this low, this is 62% of the move came to here. If it's going to go to 72%, we're looking at a move at the 2256, and if it's going to do 100%, then we're going up to 2275. But we're at a one of the pivots right now. We don't have bearish divergences, but we had them going this entire time. That really didn't do a whole lot. So I'm not sure if we really want to count them or even look at them on a short-term chart at this range, because it's they really haven't followed anything. So taking a look, last chart, this is the VIX on a daily chart. Look at the bullish divergences on this short little spot right here. So I'm going to spread this out here. Now you can see where the price oscillator is making higher lows as the VIX is making lower lows. Now, why is that important? Well, the important part is that we have the S&P in every index that's making new all-time highs. And if we take a look at the at the VIX here, we still have a ways to go to get into new all-time lows. So we have a little bit of a divergence going on with the VIX and the indexes. So again, I'm not really trying to build a massive bearish view here, even though it does sound like it. I'm just saying I'm not interested in buying because of, like I said, there hasn't been a whole lot of pullbacks. If you've noticed, I haven't done anything on the short side after I got wiped out of that, that quick put position. It was a small position, but it still sucked. It didn't even give me a chance to even think I was going to make money on it. The thing went straight up. So it was a wrong call, and I'm not trying to add on to any wrong calls. So I'll sit and watch and wait for some kind of break and then go from there. But like I said, right now I'm not really interested in jumping in at this train that's going 1,000,000 miles an hour, because we have no idea where it's going, and that just makes a dangerous setup. So with that, enjoy the rest of your night, and I'll talk to you guys in the morning.